What's going on, guys, and welcome to episode 7 of the 2K Robinhood Options Trading Challenge. In this series, we started a Robinhood account with 2K, and we are trying to grow that account to 3K as quickly as possible. The rules are simple: options only. That means no stock positions allowed. And in this video, we're going to be covering all of the trades made during the week of September 19th and see how much we were able to profit. But before we get into it, if you enjoyed the video, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And this video was a very rough one, and it is always tough making videos where you do very poorly and you're putting it on the internet. So if you appreciate it, make sure you drop a like down below. But let's go ahead and get right into it. Here we have what the chart was looking like, and here's the 19th, so the start of this week. And we made a couple trades last week going into this week. So as the market was dropping through and we had all this volatility last week, we were kind of anticipating, especially with this little spike up, that the market might level off a little bit, if not kind of retrace back to this median here of the Bollinger Bands. But that did not happen at all, right? The Fed came out and they raised interest rates by another 75 basis points, and that sent the market tumbling down and down. And to be honest, we were able to get so far out of the money because of the volatility last week, but we did not get further enough out of the money. We ended up getting hit really bad this week, and that all came on Friday. The rest of the week, actually, we were doing fine. We basically needed Friday to be either a small down day, a positive day, or just a trade sideways day. And Friday was a bloodbath, and we will see that at the very end when we jump into the Robinhood account. But let's go ahead and jump into the trades that were made over this time period. Here we have the first trade that we made, and we actually made this trade last week. So with all the volatility and the downward moves that we were seeing in the market, it felt like a good time to go really far out of the money and a little bit further out in time. So we actually went all the way out to September 23rd on this one, which was just this Friday. And this was about a week and a half trade, when generally we're making, anywhere from 4 to like 6-day trades. So what we're seeing is we came down here to 373, 372, which was really far out of the money, but because the market just crashed like crazy over the last week, it was not far enough out of the money. You could see that SPY was trading almost $20, over $20 higher than this when we made this trade, and it still ended up being our worst trade. So trade number 2 we made was also a put credit spread, and we made this one on last Friday. And again, we were able to go out of the money. The market was just going down day after day, and it's felt that way really for the past 2 weeks. We've had 2 weeks of just incredible downward moves. We've had 2% downward days, 1.5% downward days. It seems like almost every day, and it's just been absolutely insane. So here we came and we got pretty far out of the money, and we went a little more aggressive, which again came back and hurt us in the end. But we went aggressive, put in 2 contracts, and we're able to get the fill here for $20. For trade number 3, we put on another put credit spread, and someone asked in the last video why I haven't been trading call credit spreads. And really there's 2 reasons for that, maybe 3 if you want to say, but the volatility in the market has been absolutely insane, both to the upside and the downside. Obviously this week, in the last 2 weeks, we've seen the volatility to the downside, but some of the moves over the recent last maybe 3 months to the upside have been absolutely insane as well. So if we put on an iron condor or a call credit spread, we're probably going to get blown out of the money if the market makes any sort of upward move, because it's just been so volatile overall. The second reason is you can tend to go further out of the money with put credit spreads, because people like to hedge more to the downside than to the upside. So overall, you can get a little bit further out of the money. And then the third reason is I have 2 other accounts that are much larger than this account, and both of those have long-term investing strategies that are focused on basically being bullish. And if I come into this account and trade call credit spreads, they are basically saying that the market is going to go down or trade sideways, which I don't really want to do. And I don't like having competing investing strategies where, in one account I'm saying, hey, we're going to be very bearish, and then in a whole nother account I'm saying we are going to be bullish. Overall, I tend to stay bullish on the market over the long term. So that's kind of the reasoning behind that, and I hope that makes sense. If you have any questions, just leave a comment down below. Here we have the spreadsheet where we have all of the trades that we've made so far in this challenge. So you can see week 1, week 2, week 3, all the way down till week 7 where we're at now. So I didn't record a lot of the closeouts of these trades, but you can see here where we closed out. So this first trade that we put on, we were able to collect $8, and we actually suffered a max loss on this one. So this one was a little bit sad. We tried to close it out ahead of time, for around like $97, $98, but Robinhood wasn't getting us filled. So we ended up letting that one basically just expire and close out on its own. So it took a max loss there. I rounded this up, so it was like $100.50, which I don't know where Robinhood gets that number, because the max loss should be $100, but I rounded it up just because of, I wanted to be conservative with where we're at. And then here, these are, remember, are the 2 contracts. So we sold 2 contracts for $10 each, collected $20, and then we ended up closing those out. I closed them out manually, but Robinhood would have closed them out ahead of time. So you can see we actually would have expired and collected the full premium here if we jump back to where the market ended up. But around 2 o'clock, Robinhood always closes out trades that they deem dangerous. So we ended up closing out this trade around, 15 to 30 minutes ahead of time, and we ended up closing it out for a loss of around $78, $79, somewhere around there per trade. So again, a loser there, sadly. And then the last trade we were able to collect $11 on, that you saw there, and we had to close it out for $90. So in total on this week we lost $306, which is very tough. Down here, I'll talk more about these next week, but we did open an additional Google debit spread this week, and these other 2 trades are really suffering. After this last week where we had huge downward moves across the market, Google, especially with not a whole lot of time on this trade, we have maybe a month and a half, this is basically down to like $20. So we've taken a $100 loss there. So it's been a really tough week. You can see here the last 7 weeks where we've been at in terms of premium collected or lost each week on spreads. So a few positive weeks in there and then a few negative weeks. The problem is, we need more positive weeks than negative weeks to be feeling good, especially with a lot of these put credit spreads. They're supposed to be having 90% success rate. That's, what it means when you trade 90% out of the money. So eventually the market will, correct for that with volatility increases and everything going on. But right now we're just in a lot of, up and down, a lot of crazy market conditions that are really, pulling the account down. And here to end off the video, we have the Robinhood account. So you can see this is just the daily chart. And you can see here that we are down almost $300, so $278 for a 15.25% return. So again, we had a lot of trades on that basically ended up being max losses. And when you have an account this size, in reality, you shouldn't be trading a large portion of your account with options, in my opinion, just because at the end of the day, when things go against you, they go against you very hard and very fast, and that can affect your account, in a massive way. You can see at the start of the day, we were actually sitting at around $1,823, and as the market gapped down, we just basically kept getting hurt. And I thought here in the morning that the market was going to have a little bit of a reversal. I thought, it's going to sell off, and then we'll see things kind of bounce back as buyers come into the market. That ended up not happening at all. We basically just kept trading down. So overall, really rough day. Hopefully we can rebound and kind of turn this around. And all time, we're down almost 23%. You can see we've traded very level. It's kind of been not a whole lot of volatility, especially for trading options. But over the last day, basically Friday just killed our account. It absolutely just wiped us out for the most part. So, we just have to work harder, trade a little bit more disciplined, and try and, correct it in the future. Eventually the market is gonna level off. We've had 2 weeks of huge volatile moves, and you can see we've already made some trades to hopefully put ourselves into a position where we can kind of capitalize on some of that. We've been very aggressive here, the last couple days with getting a lot of trades very far out of the money and being aggressive in the number of spreads that we're actually trading. So overall, hopefully that pays off. We'll see next week if things work out for us, but I hope you enjoyed the video. If you did, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And as always, guys, thanks for watching and have a wonderful rest of your day.